Hello everyone, welcome to Money Control's Ideas for Profit. The company that we have in focus today is HIL, Hyderabad Industries Limited, which is a building material solutions company. Well, for the Q3 FY19, the company came in with a mixed set of numbers. There was a healthy growth in top line, but the operating expenses as well as the non-operating expenses increased on a year-on-year basis, which really impacted the bottom line. In fact, the net profit of the company declined by more than 50% on a year-on-year basis. Talking about the key highlights from the results, it was strong performance from both the roofing solutions as well as the building solutions segment. The roofing solution segment had a top line growth of around 9%, which was aided by a volume growth of around 8% from the fiber cement sheets. Well, in terms of the 15% revenue growth which the company clocked on the building solutions, it was aided by a more than 10% volume growth in the panel volumes. Well, overall, it was a very strong growth on the top line as the company clocked a revenue in excess of 300 crores for the first time in the history in the Q3. Well, coming to the operating expenses of the company, the margins had a contraction of around 30 basis points on an year-on-year basis, and the margins came in at 9.5%. This was due to increase in operating as well as the non-operating expenses. On the operating expenses side, the company has increased spends on the marketing, advertising and selling expenses related to the pipes and fitting segment. This segment of the company continues to be in an investment phase, and therefore the company is expecting more sales from this company and from in coming years, and has increased the investment expenditures to be able to grow the business further. Well, the other factors that contributed to the bottom line were the increase in interest costs. The company has acquired Parador Holdings in Germany, and which has really resulted in an increase in debt of the company. This really impacted the interest costs in the quarter gone by. The finance costs for the quarter came in at around 7 crores compared to around 4 crores in Q2 FY19. So that really had an impact on the bottom line. The other factor that again had an impact was the reversal of the forex gains. The company had clocked in a forex gain of around 7.5 crores in Q2 FY19. However, the same was reversed in Q3, and the net impact was neutral on a YTD basis. Talking about the sector as well as the stock outlook, well, the roofing industry has been growing at a rate of 5 to 6% per annum. HIL has been growing much faster than the industry at the rate of 7 to 8%. And has been gaining market share from the competitors, both on an organized players as well as the unorganized players. Well, in terms of the revenues drivers for the company, new product launches such as the pipes and the fitting segment, as well as Charminar Fortune, are going to drive the top line of the company in the coming years. Well, in terms of the valuations, the stock has seen a sharp correction post the announcement of the Q3 results and is now trading at 10 times FY20 earnings, which appears fairly attractive from a long-term perspective. We therefore advise investors to buy into the stock with a long-term view. Well, that's it about the Q3 earnings review of HIL. For more views and updates, do log on to moneycontrol.com.